Okay, guys, welcome to the Sunday market review. So today is Sunday, December the 3rd. Okay, and as you can see from our calendar, this week we do have a couple of red folders to watch out for throughout the week. Of course, probably the most important one is going to be on Friday, and that is the non-farm employment change folder, and a couple of other red folders as well. But obviously, non-farm is going to be the most important, right? So this week, starting with Monday, we don't have any red news on Monday. Tuesday, we've got some red folders in the New York session, 10 a.m. So in New York Open, ISM services, and also JOLTS job openings. Wednesday, we've got a speech at 6 a.m. for GBP. That's kind of like a weird time. But we also have for USD, this is the preliminary non-farm folder, which is different than the one on Friday. So this is probably not going to be as significant or as important as the one on Friday. And then Thursday, we've only got one USD folder for unemployment claims. And then Friday, we've got Italian bank holiday, average hourly earnings, non-farm, unemployment rate, all at the New York Open, which is at 8:30 a.m. Okay, so this week should be, we are starting the month of December, right? So we ended the month of November last week, right? We're starting the new month this week. And normally when we have the start of the month, it tends to be, it can be interesting, especially with NFP thrown in the mix there. Also at the end of the year, during this time, like December, January, usually around this time of year, we're going to be expecting some volatility and volume and things like that to slow down. Price action isn't really as ideal in terms of trading conditions. A lot more consolidations, a lot more price just kind of moving inside of a range or not really moving at all. So it's what you can expect at the end of the year, which is why a lot of people don't trade around this time, right? So that's just something to keep in mind as we start off the new month of December. All right, so let's go over to our charts. We're going to take a look at our daily chart for the dollar. Let's stop this right here. We're going to go over to our trading view chart. Okay, hopefully you guys can see that. All right, so if we look at the overall direction, okay, we can see that price has from the reversal point here at the swing high, we can see price has been moving bearish right down this range. Now we were previously bullish, right? We had a big bullish move which created the high up here, and then we had a reversal from that point moving down the range, right? So we can call this the high and this the low, and we can say that we're moving back into the inside of this daily range here. So we've actually breached the 50%. We've taken some liquidity below, certain points of interest below here, like this low, okay, which we are actually looking for below the 103 big figure, right? Which we did come down below that level, and we were actually targeting, this big wick here is a rejection from the wick, or something to that effect after we had taken out the lows here was to be expected, and that's what we saw price do. So you'll notice that when we came down into this level, right, it was a very sharp move back up. And we also have what we call a 3-bar swing, swing low, right? So we have 3 candles, a 3-candle formation right here with the low, a higher low to the left, and a higher low to the right, and also a confirmation of that, right? Meaning that the 3rd candle's high was traded through. So we've got actually a reversal, or potentially a reversal and a swing low here that will, we'll see how far that goes up the range, but we can start to target, points of interest above and old highs and areas above that. So this right here would probably be the first obvious target, the last high above the swing high up here, and that's going to be around the 104 big figure, right? And so we can see if that's a feasible target. Let's go down to the 4-hour here, and we can see a little bit better structure. All right. So generally, what we tend to do is, we try to look for our most, recent swing range, right? Our breakup structure and what is the current range that we're in. So if I go down to the 4-hour markups here, we can see that the last breakup structure we had was below the swing here. Okay, we made this swing low, and we were tracing back up the range from that swing low that we made right here. Okay, and this is the 4-hour range. So the last previous high to the low that we made. And we can see that price is or had retraced back up above into a nice premium level. We also kind of reacted to this level here, which we can see there's an obvious reaction from the imbalance here, and also taking out the highs just above here. So I can not as clear here on the 4-hour, but this small little high right here, right? And if we go down to the 15-minute, we'll see this a little bit nicer. But essentially, this was a sweep of liquidity into a point of interest, right? That we would expect price to give us a reaction, and we had a very strong move off of that, that reaction, which is a very big bearish candle, right? You can see like a big engulfing candle after taking the highs. So this right here potentially is going to be a projected bearish move into this smaller range right here, right? And then probably, we're going to be expecting it to breach the 50% below into the discount area into this consolidation, right? So let's just say, for example, we can target, probably an OB down here, but this is going to be just like, an arbitrary point of interest because I don't know exactly where it's going to react from, but we can look for something in the discount here for a reaction. And if we're going to be bearish, right, we actually expect price to take out the low of this swing low, right, and continue to make lower lows. So this right here would be the draw. Okay, and so long story short is we're expecting the dollar to move bearish, right, this week. So it's we're gonna have a bearish bias into levels of, let's say, 102, 102.50, right? And then seeing if we can get beyond that. Okay, so we go on the 15-minute, we can see the turnaround at that point, this swing high up here. Let's clear these markings here. Right? And we can see how we ended up at the end of the week, last week on Friday, right? We had just taken out the highs here, right? So that was that level that you saw on the H4. You can see it much clearer now here on the 15-minute. We had the sweep of the structure, right? We had a gap lower at the start on Friday, which actually came up, right? We filled the gap, we swept liquidity above the highs, and then we saw this big reaction to the downside, right? A nice change of character there with a big, shift to the downside with bearish momentum. So when we took out the lows and we traded into, this level right here, we can actually see where price gave us a bounce. So at the extreme low and right there. Okay, now we can see from just this 15-minute structure that we're still, technically we're still bullish, right? So this is the last low, this is our high, so our range looks like this, right? And so if we're gonna continue to be bullish, right, that we would expect this to be the higher low that continues price forward, upward rather, right? And through the high, if it's going to be continuing to be bullish, right? And obviously, if we're going to be bearish, then we would probably expect something, like a lower high to form. So like we wouldn't get up above this high, we'd form a lower high, maybe like here, or maybe just a little bit lower. And then we would expect price to continue down through this low, right? And so one of those two scenarios will happen. Okay, whichever one does play out is gonna be the direction that we will follow for the week, right? So we can look for the opening of the week to show us the direction that way. So either we trade higher, right? We take out this structure and we continue bullish to start the week, or we fail to breach the high there, right? And then we look for a lower high to form, and then we see price come down and take out this low, right? So it's gonna depend on how price reacts within this range. So this is a good area to keep an eye on for the dollar this week. Okay, so depending on how that plays out and what happens with DXY, we can then go on to give us projections for EU, GU, and whatever else we're looking at this week. So let's head on over to EU first. We'll take a look at that on the daily chart. All right. So if we look at the daily, we can see that we have a swing high made over here, right? Same scenario where we have a 3-bar swing high, 1, 2, 3. Also confirmed because we have traded through the low of the third candle's low, right? And then we also at this point here, because this low here, which was responsible for making this high and making the swing high here, was traded through. We also have a daily change of character, right? So it's significant because we've reached a point of interest inside of this big daily range, right, which is in the premium above the 50%. We were looking at this wick to give us some sort of reaction, which it did, right? We saw price come into it, tap into the high there. We were looking at 110 as the price level to watch because it is a round number, a big figure, right? And so as soon as we breached that 110 level, we saw a reaction, and then we saw this move, right? So nice reaction from a point of interest where we expect price to give us a reaction from 3-bar swing high, and then also a change of character, right? So we can assume this is going to be the next range. Okay, and we have price now moving towards the discount area here. There's a very nice big imbalance area we're going to look to fill, and we also have the order block at the very bottom of the range as well that we can look for a reaction. Okay, so obviously what that means is a move down into this region, and this is let's see, to fill and hit this OB down here, we're looking at 107.25, let's call it. Nice round number. And then we have a bearish order flow, right? So because we have this daily change of character here, right, and we're looking for price to now do something like this, where potentially we have a lower high, right, and then we come down the range like this. Okay, now what it does after here, whether it reacts to this and then continues higher remains to be seen, right? It could do this, or we could see price come down through this level, right? And then maybe this will be the lower high that continues down through this low, right? But that obviously is later on in the week, and lots of things could tell us what happens if that happens or not, like NFP or the other news folders that we have. So generally have to wait for those to play out before. But what we can expect price to do is at the opening of the week, what's our direction? So we can look for let's see, our 4-hour range. Okay, which, like we said on the dollar, we can actually look for, the opening week's direction to give us a little bit of guidance on which way price is going to move. So the H4, we can see that we have a swing high, right? We've got this change of character here. Okay, and we also have a move below this low, the last previous low here, but not a candle close. So this right here is looks like a stop hunt or a sweep of liquidity, right? But I wouldn't classify this as a break because we didn't break with a candle close, right? It was only a wick, and this is on the 4-hour chart, obviously. Okay, on a lower time frame, I'm sure there was a candle body break. But generally, when we see this, if we see price now move, and let's say we see price take this high, Okay, so this would be a change of character back up. This is a 4-hour, right? So if we were to see price now move through this high, right, after taking out this low like this without a close, I would probably assume, price would continue to be bullish going through the next week, all right, or going through this week rather. So let's say we trade through this high without coming back down here, okay, and we just continue up. This is what I would expect price to do. Okay, continue in the bullish uptrend and look to take out this high. So this would be the draw this week is that high, and that right there is above again 110. Okay, so making our way back above that level as our draw, and that's if the condition is that we move through this high here and we do not revisit this level. Okay, because this looks like a very strong manipulation, meaning that we've grabbed liquidity below the lows here. We had a very strong reaction away from it, like a fast down, fast up movement, right? And if we get a break of this high, that would be a bullish change of character, meaning that we're looking for continuation higher, or moving up the range. So if that happens here, right, then that would be what I would expect price to do on this 4-hour. Now, if we go down to the 15-minute, we can start to see if there are, clues as to whether that's going to happen. Right, and on the 15-minute, as you can see, is we're bearish on the 15-minute, right? You can see price is moving lower lows, lower highs, right? And so right here, this swing low that we've just made at the bottom of this range, right here, okay, that's that big spike move, right? The fast down, fast up movement. Now, the change of character happens on this time frame above this high. Okay, and I'm just using the last swing high that was responsible for the move down. This is the last break below the low, right? So there's our sweep below the low here. We might consider that a swing low, but I'll just use it as our reference point right now. Oops, a sweep. Okay, and then what I'm looking for is confirmation, right? So we can start to see a 15-minute change of character once we get above this line. Now the 4-hour change of character is above this structure here, right? So it's a little bit earlier that we can see like a confirmation if that happens here, right? We can already see that price has made a higher low, meaning that we didn't, make a lower low after this move. Although this could still move down. So that's not completely confirmed just yet, right? This could still do something like this where it just continues down. Okay, but if this does continue up, okay, from here and give us the change of character through this high, then that's that 4-hour bullish scenario I was talking about, right? If we don't revisit this level here and we don't come back down below, then let's see where that low is actually. This is the low right here. Okay, so what I mean is, price came down here and we saw price take out the low. This level here is the stop hunt or the manipulation. You can see how aggressively we dipped down into that level, right? And we came right back up. That's that V spike that happens when we take out a level. There is a big figure or mid figure there. Actually, it's 108.50. Okay, so there's a significant, price level. It's a round number, mid figure. And if price were to want to get away from that level, we probably won't see price revisit this level, right? It shouldn't go back down there if this was a stop hunt, right? So that's where that 4-hour wick comes from, right? Where we didn't close below here, and if it does move away quick enough and give us that change of character, then that means that price should remain bullish and continue up. So we have a clear direction for the start of the week, right? If that's what happens, it'll be bullish. Now, if it doesn't, right, what'll happen is you'll see this structure hold. Okay, so like we'll see price make a lower high here, right? So it won't go higher, and then we'll start to see it break down, right? And then we'll come back down to this level here, and then we should see price go through this low. Okay, so the idea is that, if they are using this as the stop hunt level or the manipulation level, then price should not have to revisit this level again, right? If they're going to move price away from here, they should want to just do it as quickly as possible, and we should see price go from here, right? Now that should fall in line with the dollar rejecting this level here, right? So we shouldn't see price go above this high here if that happens, and we should see price make, that lower high scenario here like this, and then come down through this low, right? And then this would give us a bullish EU move. Okay, so you can look at that as the correlation, right? And the dollar, using the dollar as an extra confluence to help that along. Okay, and that's going to be important because um, the dollar and EU are mirror opposites, right? They should do opposite of each other. So if that does start to play out for the dollar, then that should also play out for EU, right? So we can look for that. So next is GU, and that's going to be very similar. Okay, so if we look at GU on the daily chart, we can see that we have, once again, we have bullish order flow, right? Bullish structure, but we were, in a bearish downtrend. We were just in a bearish downtrend, but we had a reversal point here, right? So this was our low, and then from here we can see that price actually stopped making lower lows, and then here's where it starts to turn around. We have the daily break of structure, and then price continues to go up from here, right? So it's still bullish, right? Obviously, we don't really have so on there's one thing that differs from EU and GU right now is that, remember that EU we had a change of character, right? You can actually see sorry about the mess there. You can see that price actually went down below this low here and gave us this daily change of character, right? But on GU here, right, we don't have that, right? The change of character below GU would have to be below this low here, and that's still kind of, pretty far away from that level. So we can see that GU is already inherently more bullish than EU. And also we're just kind of right below this high, or these this kind of cluster of highs here, which I have marked as a draw on liquidity, right? So this level here is just above the 127.50 figure. This level that we just took out was the 127 big figure. You can see the round number here, right? And so we got a reaction from that, which did not follow through. Okay, so normally, when we reach a key level, a big figure, or generally any price point that we expect price to give us a reaction, right? We expect it to follow through. So, we can see that we took out the 127, right? We had the 3-bar swing that formed and the subsequent move down after taking that level. But then you can see right afterwards, right? Immediately afterwards, we can see a big bullish candle that came right back up. So this essentially is kind of like that V spike, right? That V recovery that moves, fast down, fast up movement. So this isn't, by any means bearish yet. Like, we don't really have any confirmation that it's bearish. So we're going to treat this, obviously that we're still in bullish order flow and bullish structure. So the target, okay, that I have is this high up here, and that's above 127.50. But, we have, this high just above that and this high just above that. So it could easily come up and target this entire cluster, right? And that's going to be my draw this week for GU, and that we're bullish. Okay, so we have a 4-hour, I'm sorry, a daily 3-bar that did not follow through. We did not get a confirmation, and not only that, we don't have a change of character, right? So this is, a stark contrast from what we saw in EU, where we had a confirmed 3-bar, right? Meaning that this third candle was traded through, and we also got a change of character. So this right here, with GU, it's different. So when we have kind of like a correlation divergence here. Okay, we call that fractional disparity. We use the dollar to kind of confirm that for us. So that's kind of like the tiebreaker. So let's go over to the daily chart here on the dollar. Right now, for EU and GU, right? For EU taking the low and for GU not taking the low, how do we see, like which one is the odd man out? Like which one is actually the leading indicator in this case? For the dollar, what we want to see is the high taken out, right? So do we see the high taken out for the dollar? And do we see a 3-bar swing low confirmation, right? So we do actually see a 3-bar swing low confirmation, but we don't see the dollar taking out the last previous swing high. Okay, so where we have EU making the lower low, GU does not make a lower low, it makes a higher low, right? We would expect the dollar, if it correlates with EU, to also make the higher high, which it does not. Okay, so it's actually correlating with GU, meaning that EU right now is the odd man out, which means that this is very likely a stop hunt or a manipulation, which we've already just covered, right? Which I just said the 4-hour here, because we did not take out the low here with the candle close and we had a wick rejection here, I'm going to be expecting this to be stop hunt manipulation and for price to continue higher from this point, right? Because we can see that there was no willingness for GU to do the same thing. We didn't come down to the low. We didn't come down even close to it at all, right? And that price is actually a lot more bullish than we see for GU or for EU, I'm sorry, right? So I would consider the dollar, to continue to be bearish. I would expect GU to continue to be bullish, and I would expect this to be a manipulation, a stop hunt, and that price will continue bullish after this plays out, right? And that'll confirm for us when we get the change of character above the structures up here. All right, so this is my target up here, 127.50. Let's go to the 4-hour here and let's just kind of confirm that we're seeing that also on the lower time frames. So let's pull up 4-hour, and we can see the 4-hour structure is also very bullish, right? Our last break of structure in fact was back here, and we had a big surge in price that traded up into a 4-hour point of interest here. Just so you guys can see what that is, it's this high right here. We have a little imbalance right here, and then the OB at the high, right? So we're actually respecting that level, right? We had a swing high form, we saw a shift, right? And now we're looking to see if, price is going to continue down. We actually didn't get a follow through here. So this is what I was talking about with the follow through, right? We can see that price actually didn't come down below, right? The reaction at the high gave us a swing high, but we didn't see it make a lower low or a higher low over here. We saw price actually hold the internal structure. So I would consider this, still bullish, right? Obviously this nice big bullish candle, and then running this high next, and then targeting the 127.50, right? So again, our draw is going to be 127.50 up here. Okay, looking for bullish continuation. That's on the 4-hour. Now translate that to the 15-minute, right? So what can we look or expect for the start of the week? So here's our 15-minute. There's our draw. Here's our 15-minute ranges. Okay, the last 15-minute range, or the current 15-minute range that we're in, this high to this low, okay, where we actually traded down into, discount levels already, right? We can see the order flow has respected OBs in the discount, meaning that we did not break the low here, right? We did not break the low here, and then we saw this last very strong move to the upside here, which broke internal structure. So we're bullish here on the 15-minute. Okay. This is a change of character here because we took out this low, right, as a stop hunt. We respect the major swing, and then we took out this internal high. Okay, so it's bullish on the 15-minute. So I would expect this to continue up and through, right? And then the target is going to be, like I said, 127.50. So if we get a swing here, or like we get some sort of swing high that forms and it comes back down in the range, we have a very nice range to work with if that happens. So let's say this is the swing high. It does start to, come down. Then I would expect price to stay inside of um, this leg here, this bullish leg, and then I would look for price to come back into, points of interest in here. I can see there's an imbalance right here in the discount. I'll couple it with the OB there. It's kind of a broad 15-minute range, but I'm just looking for, price to come back into this area here and then give me a bullish reaction, right? So what I'm looking for is for price to come down, make a swing high or swing low, I'm sorry, and then continue up and then through the 127.50 level. So this is where I would expect price to pull back at the start of the week, right? And then so let's say it's London session or maybe even New York session. This is where I'd expect the low to form, right? So I wouldn't move on this until I see that happen, right? So maybe Monday at the start of the week after the Asian session and the consolidation that forms, I want to see price come down here, right? Form a swing low, and then like London Open, we have something like this form, right? Or New York Open, okay? And then look for the continuation after that. Okay, no guarantee we'll get a big pullback like this. This is the ideal scenario, right? It could be a shallow pullback, um, you know, but whatever the case may be, that's the general idea I'm looking for at the start of the week, right? So we can look for that on GU, and that's that. Let's go over to gold. All right. So for those of you that were on the call last week, when we did the review last week on Sunday, and my predictions for gold, if you guys remember what they were, all right, I had said that basically that gold has this seasonal tendency that it does every year. Most years, not every year, but most years, that's what it does, is that it forms some kind of low around, September, October, the fall period, right? End of third quarter into fourth quarter, and that's this low right here. Okay, this was formed at the end of November in this case, or middle of November rather. Okay, and then this low rallied or is currently still rallying, okay, up and through, right, which I expected to do so through the first quarter, right, which is what gold does. So into like January, February, March, into those months, okay, in the start of the first quarter, I expect gold to continue to be bullish, right, and I projected price to go through this high and make all-time highs above, let's say 2100. Okay, is just a arbitrary, big figure. I did not expect it to do it this quickly. Okay, I wanted actually to see it. I was expecting it to do it, later in 2024, but it looks like we're going to be running this level. Probably this month. It looks like anyway, and maybe NFP is going to be, the catalyst that gives us, the move above 21. Okay, but you can see last week, we ended off on this pretty big, big bullish candle, right? So it could very well be that, at the start of the week, right, when we open up on Monday, that we get a big push through this high, right? That's also very possible. And you might see, all-time highs at the start of this week, right? And that's very close by. So the target is still this high, okay? So 2080, right? But I'm looking at, big figure 2100 and beyond. Aside from that, okay, so it's very, very close. Obviously, it's going to be risky to take, entries this close to that high because there is, the possibility that after we take that high, it's going to give us a big reversal back, back down. So just be mindful of that, okay? But certainly, as long as we're below this level, this high, okay, I would expect bullish moves to take that high out. Okay, and that's what I would expect starting off the week here for gold. So if we go down to the 4-hour chart and do the same thing, you're basically looking at the last break of structure, okay, which is right here, okay, and the last kind of move that we had on Friday was this big bullish kind of surge to the upside, we don't really have a swing high that's formed yet. So I would just assume that price is going to continue to be bullish. Here's our draw on that high, which is right here. Okay, and that's our target. And so, like, I don't really know what's going to happen at the start of the week. We might just, in Asian session at the start of the week, we might just blow right through that, right? And then so obviously, if that happens, then I would just wait and kind of play it by ear, watch for a retracement, a possible retracement, because we've taken out, all-time highs, which is bound to happen. And because this is gold, right? You guys that trade gold know how volatile this can be and how much it can move, when it is volatile and moving, right? 300, 400 pips in a day is not, uncommon or even out of the question for something like gold to do. And the recent surges in price that we've had to get to this level here, right? It looks like it's going to make it there pretty soon. So once that happens, okay, I would probably recommend just leaving it alone and seeing what it does, right? We get a nice structure to form, a higher time frame structure, okay, not like a 15-minute structure or a 1 hour structure, but I'd want to see something significant on the 4 hour or the daily that gives us some kind of bearish, confirmation. Okay, so what that means is something like this, all right? And that will take some time to play out. So you have plenty of time to watch how this unfolds without trying to rush into, a reversal, right? Because that's not really what you should be looking for, is trying to catch that high. But just know that when we take out a significant level, there's probably going to be, a pullback or a correction, right? And so I don't want you to try to like catch that. Like I want you to see if there's actually evidence of that first, and then you can look to take, setups after that happens. But by no means does that mean that I'm looking to, catch the high and get the reversal, right? I'm actually expecting this to continue to go, higher after that. So, after that retracement. So we'll see if that continues. Like I said, the projection for me for gold is that this is going to continue to rally into first quarter of 2024, right? So I'm expecting this to continue to be bullish and to continue to make, all-time highs as we pull back and go higher. All right. So I would observe, especially because this week is NFP week, right? It can get a little hectic. And luckily that's on Friday, right? So we have actually the whole week to see how this plays out before that happens. But just be mindful that it is also NFP week, and you want to be careful with what happens with gold on NFP. All right, not much really else, we can say here because of, there's not much to work with. We just have this big bullish candle, right? Not going to be a whole lot of structure here, the 15-minute, but we can see how bullish we are, right now. This last move here on Friday was ridiculous. It's coming down here from 2034 all the way up to 2075, right? So like I said, 400 pip move in a day, it's like nothing for gold. So this last structure broken, okay, we would expect price to continue to that all-time high level, which is 2080. It's like right around the corner right here. So I would expect maybe a little mild pullback here, maybe a consolidation like this, right, in the Asian session, and then the New York session move up. Okay, that's the thing with with gold, with commodities, with like oil. If you guys are trading oil, or indices, right, like Nasdaq, S&P, whatever. Those pairs tend to move in the New York session, right? Not so much in the London session. You'll notice that this move happened in New York session, right? This big surge happened in New York session, and London session just gave us this little consolidation, right? And that is prevalent throughout, right? You can look at every single day and every single session. The majority of the big moves are going to happen in New York session, right? So that's what you want to look for, the setup and the moves to happen if you're trading gold. Sometimes you'll find good setups in Asia and London. Doesn't mean that they won't happen. It's just that the probabilities are much, much higher and much better in your favor if you look for them in the New York session, right? Same goes with indices if you're trading indices. All right, so let's take a look at that right now in terms of, NASDAQ. Okay, so NASDAQ on the daily, we can see that we have a swing high here after taking out this structure. And this is also a big figure level, which is 16K, right? 16,000 level. And, it's not a very strong swing high. Obviously, you can see there's, a lot of back and forth here. The candles are kind of small. It's not like a shift. There's not like a big bearish shift and momentum after taking out the high here, right? So it's still kind of the early stages of whether or not this is actually going to give us, a significant, swing high and reversal, right? If this is going to be the high and, this is going to be the range, then you can see that we're still at the very tippy top, right? So no, confirmation yet, other than that we have a bearish swing high, meaning we have a 3-bar swing high, right? Swing high, lower high to the left, lower high to the right, but we don't have a confirmed swing high because we don't see, or, we didn't end Friday by taking out the low, right? You can see that price actually failed to break below that low. So this is actually still very bullish, and we could still see this continue higher from here. There's no real guarantee that we'll see it retrace lower. Okay, but like I said, this is still the start of it. So there's lots of things I could do inside of this range. Like we could see it go back up again, right? And if it respects the high here, maybe consolidates some more, right? And then comes down, after um, some coaxing at the high there, right? Maybe some consolidation, right? So there's some stuff that can happen here before it actually makes this move. So I'm not really too sold on this being the high just yet. Okay, I still need a little bit more information before that happens. Okay, and this is just a daily chart. Let's take a look at the 4-hour. Okay, now what is important to note that is that, we did take out, key levels up here, like I said, 16,000, okay, previous weekly high, and we did get a very nice reaction from that when we took it out. So if we take I should have it marked here on the 4-hour, but you can see, yeah, the high here was swept, okay, right? And again, we swept it with a wick, right? We didn't actually close with a candle close, okay? So it's not a BMS in my book anyway. And this is more like a manipulation, right? Or a stop hunt above an old high. And we can see that after that happens, we get a big shift and a big bearish candle, right? And then this would be considered a change of character. Okay, so this is the start of a bearish swing high. Okay, and it's certainly on the 4-hour would indicate that we could see potentially this being the swing high and that this is going to be the reversal. Okay, but this right now has to show me a lower high here. Okay, so what I need to see is price respecting this swing high. So I'm going to mark just where you can see right here. All right, and if it's going to be bearish and this is going to be the high, then this is going to do something like this, where we will have a swing high or lower high rather, right? And then it's going to start to come down like this. Okay, so this has to hold, and then we should see a lower high form somewhere over here. So this can be bullish, right, until we get up to here, respect the level, and then make a lower high, and then start to break down after that. Okay, so there could still be some consolidation here, right? There still could be some, price could still mess around a bit here, make a lower high, and then come down, right? Lots of different scenarios, but you get the idea. All I'm saying is that this is our range right now. Okay, we're inside of this high and this low. Okay, and we're looking for price to either respect this high and make a lower high and come down, or if we see price get, from this bullish move here, go through it, okay, then we would expect it to continue to be bullish and trade higher. Okay, and that's just following, market structure. Oops. Okay, so that's our 4-hour range. Let's go down to our 15-minute. Okay, and I'm just going to do the same thing here, and we're going to confirm what we're seeing here on the 15-minute matches our 4-hour. Okay. Oh, I didn't put this down here. That's why. Okay. So the 15-minute, we can see the last break of structure here is bearish. Okay, so that puts us at this big range, this high and this low. Okay, so it's the same thing. And we can see that the last low actually held. Okay, so we made an attempt to go lower. We saw this high, make this low, lower high, lower low, right? And then here, lower high, but we didn't push through, right? We didn't make a lower low here. Instead, we made a higher low and then we came up. Okay. So this tells us that we're bullish here on the 15-minute, and this is a change of character. Okay, and at this point here on the 15-minute, we can look for price to continue to be bullish. You can see we made a higher low here, right? Higher high, and then make our way up in here, right? So remember, on the 4-hour, we're looking for price to come back here, right? If I put the 4-hour markups back up in here, right? I'm looking for price to come back into this 4-hour premium level. So it makes sense for price to continue higher here until I see that happen, right? And then from this point here, are we going to respect the high, right? Make the lower high and then continue down, or are we going to continue through and be bullish? Okay, so that's what we're looking for here at the market open. And for NASDAQ and to continue, either we're going to be bullish or bearish. That's what we need to see happen. Okay, so if we get a reaction that's bearish, we'll see price hold this high. It'll give us a change of character back down, right? And then we shall see this or something to that effect, right? But if it's bullish, then we'll see this just go straight through, right? So those are the expectations there for NASDAQ. It's probably going to be pretty similar for the other pairs, right? If you're trading the other indices, US 30, S&P, these all run pretty similar, right, in terms of correlation. Okay, that's the 15-minute here, and okay, so that is pretty much the rundown. If you guys have any questions, let me know. Is there anything that I covered here that you guys weren't clear on? Or if there's anything that you guys want to ask, you can do so in the chat. Okay, but this is for those of you that are, not in the free membership or not in the VIP. This is what I would do for my members every day, right? So obviously I do this once a week for the free members, but as a VIP, this is what you would get on a daily basis from me, right? So Tuesday, Wednesday, Thursday, Friday. We have a full breakdown, right? And look at the day's market opportunities and seeing what price is doing, and just basically seeing the markets from my perspective, right? And then at the end of the week, we have a big review session, and we pick a pair to kind of go through and study for the week, and then we kind of look at all the different opportunities that could have happened, let's say on EU or GU. Like for instance, this week we did EU, and we just go through a week worth of like live simulation, and then seeing if how we would have approached that week in an ideal scenario, looking at all the different opportunities that we could have taken. Right? No questions? Doesn't look like it. Okay. All right. Well, I think that'll do it for this session. I appreciate everyone taking the time out. This will be posted. Okay, so there's a recording for this. You guys will get an email with the recording for those of you guys that signed up. If you have any questions on anything, if you have, or if you go back through the recording and then you think of something later, you can drop a comment on the video, or you can always DM me on Telegram, and or reply to the email, and I can send you a reply on that as well. Okay, but I hope that was helpful. Hope you guys, got some value out of it today. And we'll see you guys on the next call next week if you guys want to drop back again on Sunday. And hopefully you guys, will sign up for the free membership. At least take a look at what we offer in our membership services. And there's lots of free content and tutorials in there that you can go through for free and just take a look around, right, and see what we're all about. Okay. Yeah, that's it. You're welcome, guys. I appreciate your time. Let me stop the recording here.